Joining us now is Gina Sanchez, Chantico Global CEO. Gina, welcome for our trades today. All right, so let's begin with the stock of the week. ARM trading above its $51 IPO price, still today quite nicely higher, almost 64 a share. You're a buyer, is that right? But maybe a cautious one?
I'm a cautious buyer, only cautious because it is a tremendous valuation, but the story is very clearly there. And this is a company that is IPOing profitably with massive sales and revenue. And that's huge. Right now, the markets are rethinking what is going to survive over in a world where interest rates are higher for longer. And that means that you need more value for what you're buying. And a lot of the IPOs that came out, Kelly, in 2021, 22 came out with a lot of expectations. They came out unprofitably. ARM is not that. ARM is shipping billions of investments and making revenue, you know, well above the 2 billion mark. And so this is what you need right now in order to survive. I think ARM can buck that trend.
All right, you're sticking with it. So let's move on then to a lesser known one, but with how few IPOs we've had, it's gotten some attention. Savers Value Village. This was the end of June. It's down about 11% from its opening trade, but still above that $18 IPO price. Guggenheim saying the thrifting trend will continue to drive sales. You agree?
I totally agree with that. And we're seeing it all over the U.S. We're seeing it globally. So this circular economy concept has really caught fire with millennials. And millennials are a very large cohort of buyers and of consumers. And so the idea that you can take something and wear it all the way to its life, to the end of its life, right down to when it has holes and still make it trendy and fashionable. In fact, there are items that are being sold in thrift stores that are actually more expensive than the original items were to begin with, out of creativity. So we're seeing a lot of value being created in this, and, you know, Savers Value Village leans right into that.
All right, that brings us to our final buy of the IPO crop and the mystery chart that we showed before the break. It is Kenvue, the spinoff from J&J. A lot of headline troubles for them lately. They dipped below their IPO price even before that, off almost 20% from the opening price. Canaccord, though, among the analysts saying they could benefit from the FDA's findings on ineffective decongestants in the long run. Why are you buying, Gina, here?
So, look, I think, yes, that the headline was terrible. I agree. However, if you look at the broad swath of brands that was included in this spinoff, I mean, these are names like Tylenol, like Band-Aid, Johnson & Johnson shampoo. These are names that have been on the shelves for a long time. They have a tremendous amount of brand value and consumer recognition. The spinoff spun off profitably, and I think that they'll continue to weather that storm. So the fact is that they can weather a storm like this, and these are the kinds of products that people buy when the economy slows, and we're expecting a slowdown. We're not calling for a recession, but we're certainly expecting a slowdown, and in a slowdown, people buy stuff they know.
Yeah. We should mention all of your buys are from the 2023 vintage, and your bail is a little bit of an earlier one. And I think that the vintage year has a lot to do with the performance here. Beyond Meat, back in 2019, went public at 25, opened at 46, broke above 200, let us not forget, and is down sharply since. TD Cowen just initiated it at underperform this week, saying they're facing an existential threat, losing market share, and are trying to preserve cash.
Yeah, it's a tough haul, and you have a lot of names like Beyond Meat. These specialty food and specialty beverage segment, when people get really concerned about their cash flow, they kind of go to stuff they know. Like I said, that's my thesis for J&J, for Kenvue, and the opposite is true for Beyond Meat and anything like Beyond Meat. You know, these are things that people like when they're feeling flush with cash, and that's not going to be the case next year.
Incredible. $10 stock now. You also mentioned Oatly. I think it's become literally too small for us to mention and is at risk of being delisted. So let us not forget. I mean, do you think this was just unique to the last couple of years, or is this still a risk for any IPOs that are coming to market?
Look, I think the idea of these food products are interesting, but the question is, are they interesting enough in order to command wallet share? This is the real push, right? So can you make an argument that people are willing to spend because they think their health is going to be better as a result of this? I don't think that people are seeing that trade-off quite yet, or they're not seeing it fast enough to be willing to lean into it in a slowdown. And right now we're focused on defensive names and meat and potatoes, and I mean real meat and potatoes.
All right, Gina, thank you very much. We appreciate it today. Gina Sanchez with 3 buys into bail.